Hello, Alpha Chain traders. Welcome to my weekly crypto market recap. My name is Patrick Maldonado. I am a junior cryptocurrency trader and market analyst at Alpha Chain Capital and also creator of TCE Trading. Guys, how are you doing? It's a very good week for Bitcoin. I'm gonna be discussing that. Definitely very interesting. We just have a previous conversation about it just here in the meeting. But in any case, guys, just to let you know, if you are new, the way that I usually do these crypto webinars is that I look at the recent news, at least of last week, which is an important indicator of what the market sentiment might be during this week. Later on, I also cover more about the market analysis, what has been happening with Bitcoin in relation to other markets, just looking at the macro so that you have a better perspective of what's happening so that maybe you can guide your trading accordingly. And last, I usually cover some topics of interest. In this case, because I know that there's a lot of new traders and that they might see this webinar even after, I'm going to be covering some of the sources that I use that are mainly for beginners, but if you are trading, it's going to be very useful for you just to have a look at them to see more about the market sentiment and to see more where the market could go. So I see that more people are joining. Hi everyone, I hope that you're doing great. I'm going to start with a new section just as usual. Very interesting, definitely. Let's just switch the screen to this. So guys, just as usual, let's cover some of the news. I put them in a particular order because the last one is going to be connected with the market analysis, which is huge right now. I hope that you will appreciate that. So if you have any questions, please write them in the chat. I will review them at the end of the session just to see if there's more potential there or anything that you guys found interesting. So the first news is Armstrong says silent majority supports Coinbase apolitical stance in leaked audio. Now, what I'm including this and the reason is because basically we are in that territory of being in the election time, right? So a lot of these news are going to be important, mainly to see what's going to be happening with the cryptocurrency industry overall. How is this panning out in the long term, or maybe in the short term as well, to see, depending on the political outlook in the US. So Coinbase leadership recently moved to curb socio-political discourse within their company, mandating that a team should focus on the company's mission rather than politics. So Coinbase co-founder and CEO Brian Armstrong later held an all-hands meeting billed as an Ask Me Anything session. And the important thing is that this meeting was leaked, an audio was leaked to media outlet Motherboard. Now, what Motherboard was discussing or was kind of like arguing against Coinbase is that they say that the stunning in internal discussion, it was forcing employees to delete political Slack messages. Now, of course, this is kind of out of the topic of the webinar, but you might think if it's a good idea to have politics in the workplace or if not, that's up to your own interpretation and that's up to your own opinion. But what is important is to see how again this environment of the elections is affecting cryptocurrencies and also cryptocurrency companies. And this is very important because here it says that roughly 5% of Coinbase staff subsequently took an exit package from Coinbase, leaving the company. So that's very interesting to see how politics are kind of affecting and not only the market overall, but also specific companies depending on their views on the their political stances. I think it's very interesting to see, to say the least, because that really might repercute in how the cryptocurrency industry might be evolving. In any case, I mean, this is again not as important news, but it's really important just to see how this is affecting overall. So next thing, OKX founder reportedly under investigation as exchange suspends withdrawal. I think we covered that they were actually suspending withdrawals before. Now the founder is reported to be under investigation, which is very interesting. I mean, we also have some news about other brokers being hacked very recently. So of course, this is kind of like important to say the least in terms of how the market is perceiving Bitcoin, the price action, and so on. But I mean, it hasn't seen that it has affected the market overall. And let's just read a little bit about this. So the founder of major global crypto exchange OKX has been reportedly questioned by authorities previous to the suspension of the cryptocurrency withdrawals. So founder Ming-Xin Xu has reportedly been questioned by the police. Chinese news agency Caixin reported today. According to the report, the executive was investigated at least a week ago and has also been absent from work for some time. Now, the important thing here is that he, they were approached in terms of the OKX group, OK Group here, and they say that OKX told Cointelegraph that the exchange is no longer affiliated with OK Group, where Xu is a senior executive and therefore was not in a position to comment on his activities. So why is this important? Again, it's OKX is a very, it's a massive as well exchange. It's very recognized. So just seeing that, some executives in there and then looking that the overall group says that they're not associated is not a good thing. Also, there have been some investigations, and that's why the suspension happened. And now, of course, a lot of people have to be very patient because there might be a lot of people that are in the exchange but are not involved still. They have suspended withdrawals, so they can't take anything out. And sometimes this can be reflected in the price actions. So the news comes shortly after the suspended withdrawals of crypto assets on its platform. According to the exchange, OK's private keys holders are cooperating with the Public Security Bureau in an ongoing investigation, the exchange told Cointelegraph. So they say that we are unable to disclose the nature of ongoing investigation. That's pretty standard, but would like to assure that all OKX users and their funds are safe and that all other functions of OKX are unaffected. So pretty much they might be really investigating individuals in there just to really check on them. Again, this is one of the, I would say, disadvantages of centralized exchanges, and we have talked a lot about this in recent webinars where we have discussed projects like Uniswap, for instance, that it's an decentralized exchange that you only need a wallet. You connect that via MetaMask, you connect that via another wallet into the exchange, and you can freely just exchange cryptocurrencies with one another. So that's very important because decentralized exchanges, they are not centralized, right? So there's nothing that can stop you from taking out or from exchanging your currency, which is very important. For instance, in this case, this is opposite, right? Because it's centralized, they can do whatever they want. They can cut those withdrawals, they can cut that trading if they want to, and they can, at some in some manner, they can kind of like hamper if you're trading, if you're doing something. So again, I've discussed before how there's positives for putting your cryptocurrency in exchanges, but there's also negatives, and this is definitely a negative because there's a lot of people that might not be involved with anything. They were just in the exchange, and now they can't take their money out. They can't take their crypto out, and of course, this is again another pointer for cryptocurrency or decentralized cryptocurrency exchanges. Now, regrets. This is a very, I don't want to say funny story, but very interesting nonetheless. So Ripple CTO sold 40,000 Ethereum for just $1 each. Of course, this came out of some Twitter kind of responses, but it's very interesting to see how the economic environment in the past looked in comparison to what it looks now. I hope that you have heard this also kind of story of someone who, I believe he bought a pizza with 100 Bitcoin or something like that. Back in the day, I think it was less than $100, something like that. And now, those 100 Bitcoins, the worth right now would be way, way more. So it's definitely interesting to see how people, think about cryptocurrencies as investments and also for the longer time frame. Like, a lot of people, they don't really think that I mean, and they didn't think even before, and still don't think that they can really get more market share. I think, in my opinion, it's more about the market capitalization rather than the price itself. It's how much value the network or for each cryptocurrency is. I think that's the most important. So Ripple's David Schwartz has revealed that he sold 40,000 Ether at $1 each as part of a risk management plan that he made with his spouse. It's very interesting. I'm not gonna go to everything, but he sold this Ethereum. Of course, the stash would be worth more than 15.5 million at today's price. And he also said that he sold not only Ethereum, but he regretted to sell Bitcoin for 750. Of course, it's more than 10 times that, and a large, let's say, trove of XRP at 10 cents. At one point, this reached also $1. I think even $3 XRP at the peak. So, when you're talking about 15.5 million at today's prices, but in reality, if he would have sold even closer to the peak in 2017, or maybe not that, but even half, that would be even more. So that we're talking like big money in here. Of course, he revealed that really is what is happening is that it was mainly because of his risk management, and he said he's a risk-averse person with people who depend on him financially and emotionally. So, I mean, something that you need to take into consideration while trading, and I also tell that to to all of my students as well, is that you need to take a look at your personal finances. You need to take a look at your personal profile. That's very important, to say the least. Why do you need to take a look at your personal situation? Is because that might hamper, or that might take a lot, it might impact the way that you trade. If you, of course, have people relying on you, if you have not secure financially, then you might be risking more, and that psychologically can affect you. In this scenario, I don't think that he did anything wrong, because by that time, of course, in hindsight, we know that the price went up, but by that time, it might be or might have been the right kind of call. If he had way more, maybe he was just deleveraging a little bit and he had still more in his pockets. But definitely, this is as well, this is something to consider, the adoption in the future, and how the market capitalization compares to other cryptocurrencies. I mean, to other financial markets. Because back then in 2012, we're talking, and I'm gonna take a look at the coin market cap, but we're talking several billions less than it is right now. And if we compare, for instance, FOREX, it's about 5.5 trillion per day volume. If we compare stocks, it's also billions, and if not trillions in terms of the overall economy. All right, so crypto is really small. Even now, it's still small. Even if it hit 1 trillion, which it almost did in 2018, 2017 to 2018, even if it did hit 1 trillion, it would still be relatively small against the bigger, the biggest kind of financial markets out there. So it's very interesting to see in that respect what people think about the total market capitalization. Now, this is kind of like the most important news, and I'm going to explain more in the analysis right now. So Bitcoin diverges from legacy markets as breathtaking rally predicted. So Kraken has identified a decreasing correlation between Bitcoin and the legacy financial market. So I've been talking a lot about this, guys. I've been writing a lot about this, about how correlated Bitcoin has been with traditional markets, in specifically talking about the stock market, the S&P and all that. So I've been talking a lot about this, and I mean, my stance is still in there, but my stance is that it's still correlated, and depending on what traditional finances do, Bitcoin will move forward. Now, the reason that I'm bringing this, of course, is because of what has happened on the recent week, and also what they have to say. So the Kraken's September volatility report found Bitcoin largely maintaining a negative correlation with the U.S. dollar index. This is something that we have been talking about a lot in the charts. Whenever the dollar currency index goes down, usually Bitcoins go up, and vice versa. So this has been a very good chart to look at if you want to see what might be happening with Bitcoin. Now, the report notes that while starting the month, the start of the month saw an 8-month low correlation between the Bitcoin and the S&P 500. The correlation would later increase as both markets experience a sideways consolidation. And this is very important, and we're going to take a look in the charts. Because right now the correlation is really going down, and I'm going to show it to you. But in any case, what they point out really is that this kind of correlation is decreasing, which is true, and this is why I really want to go into the charts finishing this, because this is massive. Now, you might not see it right away, but again, if I explain how the market has been for this time around, I hope that you appreciate how correlated both markets have been, and mainly not I don't want you to see kind of like the price action in terms of how much percentage it went to the upside or to the downside, but what I really want you to take a look is just how the movement relates. Here we both for both Bitcoin and for both the S&P 500, we have a relative top high. It went down, it crashed again due to the pandemic crisis, then it rebounded here. Around here we had a consolidation. I hope you find it here in the stocks as well. Then again it rallied to the upside, just the same as stocks. It found a higher high in there. Here, of course, relatively to this previous peak, it found higher high around here. Then they both corrected, they both consolidated in here. Again, you can see it here in the S&P 500 consolidated, and then rally up again. So the correlation has been there. There's no point of discussion where you can say, yeah, it has been correlated, because even though it's not perfect, I hope there has been strong movements that are very similar for them. Now, why am I bringing this, and why this is important is because of the recent price action, right? We know that for all of them, for both of them, we have kind of like a consolidation around here, right? Now, I'm gonna argue, from an opposite standpoint, that the stock market really reached kind of this area of a double top, which is the previous peak. Whether in Bitcoin, by this time, it didn't reach, or hasn't reached yet. Now, of course, this is on its way up right now. The important thing here is that from this point on, Bitcoin started going up, as you can see here, and the stock market started going down. So, you can see there that they are basically diverging from each other, right? Now, this is very important. Why? Because the way I call it is the big decoupling. So Bitcoin has been very correlated with the stock market for the past how many months? 6, 7, 8 months, when all this happened started happening with the pandemic crisis. So I hope that you see that it has been very, very correlated to this market. If the S&P went up, Bitcoin would go up. If the S&P went down, Bitcoin would go down. Now, this is the first indication that there might be potential, it's not assured, that the Bitcoin price action is gonna decouple from traditional markets. Now, what's the repercussion of this? Of course, if you take a look at the macro picture with the S&P 500, you take a look at the elections, you take a look at the uncertainty, you take a look at the world environment. The governments have been trying to put a lot of economical ease on people. They have printed, I think, I saw some figures. I'm not, don't quote me on this, but I've seen in some papers, they say that, they have been printing almost 20% of the total supply of fiat money in there. So there's a lot going on in the economy, right? If you take a look also at unemployment rates, it seems that they're actually going up. Of course, they're up in comparison to before the pandemic. So it's pretty clear what the economy or the impact on the economy was during this crisis. Now, despite this, the recovery has been tremendous for all assets. We have seen, it did not only recover, but it surpassed the previous high, which, I think in my opinion, at the very least, and we have seen also in Ron's webinar in his analysis, we have seen that this, this euphoria does not reflect in the actual economy, right? You go out and look at different jobs, opportunities. You go out and look at the people who, who are unemployed, and the crisis is still there. And in other countries, I'm originally from Mexico, so when I talk with my family in there, things are not looking so bright, and that's the same in a lot of third world countries and so this has a real impact on the economy. Still, markets have been going up, not reflecting that. Of course, a big part of this kind of like rise to the upside would be due to how much are they printing. And basically, this is a situation where the richer get rich, because all what they're printing are going to bail out banks. Well, maybe not banks, but bail out companies. It's basically to trigger or to impulse a kind of the stock market. And it has been shown. You can see how as they started printing the overall stock price, the stock prices have gone up. Now, while this is very interesting, while this is major in terms of price action and what can happen with Bitcoin, it's important to wait for some confirmation. Now, for me, what's the confirmation? Now, let me just delete these two. For me, confirmation really would be if Bitcoin, breaks this area of resistance and continues to rally. So if Bitcoin rallies while the stock market still falls to this level or stays in consolidation within this area, for me that would count as a confirmation for this decoupling of traditional financial markets. Why am I saying until that happens? Because with all fairness, in terms of ratios, again, I like to talk about the ratio between the price actions. The stock market did reach this area of resistance, whether Bitcoin did not reach at this time. Now it seems that Bitcoin is reaching that. What I'm trying to say is that maybe Bitcoin is lagging behind. Bitcoin here did not go all the way here as it was supposed to if it was strictly correlated. So maybe it's lagging behind. And this is why these levels are very important. This is a make or break level for Bitcoin, mainly because the stock market is going down. So we have found a lot of bear pressure with traditional stocks, but this is really the spotlight. Bitcoin is the spotlight of the show right now. It has been going up tremendously, and we're going to take a look not only at that. I also want to take a look at other markets. Of course, here the DXY, the dollar currency index, it has been very erratic. I have been saying that, but again, the correlation, the negative correlation with this stays here. This is going down and this is going up, so that's very normal. The interesting thing here is to see how stocks are going down while this is going down. That might be highlighting some kind of issues with the overall economy. Now, this chart has been very erratic. I hope that you see why, because here we even had something that resembled a potential inverse head and shoulders, which broke to the upside. Then again, what I was expecting is this to have potentially some support, start going up, but it behaved very erratically. It did not only break, then it tried to go up. Now it backtested this kind of like again as resistance and went back down. So it's been very erratic, but nevertheless, we have seen that the price action, as this goes down, Bitcoin goes up, and vice versa. Now, if we take a look at gold, gold has not done anything right now. Gold is pretty much stagnant. From a technical analysis perspective, this was a descending triangle. It did break, but it's still testing this resistance. So my guess is that people are holding on right now and to the election term, they're waiting to see what's going to be happening, and they're planning their next move. I mean, that's pretty, you can see it from this price action, at least in gold, in terms of the uncertainty. Now, in terms of cryptocurrencies and in terms of Bitcoin, I hope that you see that finally Bitcoin is kind of like getting more dominance. It has been going down a lot from these levels, from the 70% level, and it hit kind of like a low of around 57%. Now, of course, this is because of DeFi, the decentralized finance, and how that boom really affected the cryptocurrency market in a positive way mainly. But now Bitcoin is gaining some momentum back. It's getting some of that of that market share. Let's call it like that. So this is very important, because usually what happens is that there's cycles in cryptocurrencies, right? So the cycle usually goes as Bitcoin goes up, the altcoins start bleeding, they start going down at first, then they catch up and they overcome Bitcoin, and then when Bitcoin is actually having a strong correction, it goes down, and that's where the bleeding starts happening for the altcoins. And we saw that recently. If we take a look at perhaps other assets, let's take a look at Ethereum, but against Bitcoin. If we compare it to Bitcoin directly, I mean, the same has been true in terms almost of the overall market, what has been happening. But I hope that you see that here, Ethereum and most altcoins have been really surging a lot right now. Even though Bitcoin is reaching these highs again, as you can see here, I'm gonna highlight it. So even though Bitcoin hit a high here and is reaching out, now altcoins are not really coming back up. They're actually going down. This is because of the dominance. Now the problem here really is that if Bitcoin cannot break this, if Bitcoin can break this, maybe they will suffer, but they eventually will get some of the gains. But if this tests and then come back down, and might be bleeding a little bit more, because then this might be the case of a double top or a recent double top. If that's the case, again, if it breaks to the downside as well, it might have strong repercussions if it starts to coupling again, or to be more correlated again to traditional market. So this is very important for you guys to really check out, be on top of this, just for your own trading and potentially for investments opportunity, because this is going to be a make or break kind of a moment in the market. Now, the last thing in terms of analysis that I want to take a look at again is the CME futures. I've been talking about, even on Slack, I posted, I hope that you saw that, but again, it's a self-fulfilled prophecy where a lot of these gaps that happen during the weekend almost usually fill, almost being more than 99% of the time. Now, I hope that you see here, I already deleted it, but there was a gap around here which got filled by the price action. I hope that you see this again. I was pointing it out. Actually, after doing this, I started doing some longs, and it actually went back up here, retesting this resistance. And this is again why it's a make or break situation, because we have a strong resistance. I mean, the resistance is, for sure is there. If it fails, it wouldn't surprise me again to see Bitcoin correcting down here. But if it breaks to the upside, let's talk about that positive. The first target, in my opinion, would be 14,000. That's definitely the first target. The reason is because of the price action that has happened beforehand. I hope that you see here. This is basically the area that I would expect Bitcoin to go at. So it's around 14,000. If it breaks that area, okay, now we might be talking about more volatility hitting the market. But baby steps. I don't like to foresee too much into the future if there is no confirmation. As of right now, this is again the make or break. situation right now. It's a strong resistance area. We'll see how people behave in that. If it breaks 14,000, it's more of a possibility. Here, of course, if it breaks 14,000, we are really starting to talk about potentially all-time highs, increased volatility in there, or potentially creating a new ceiling, a new resistance level. But so far, even from this price action, it's not very clear what would be the next resistance level. Probably around 16,000, maybe 17,000, since we have kind of like a peak around there. But we have to wait and see. Right now, I still doubt that with the overall economy, Bitcoin would go to all those levels unless there's something like critical and there's a massive decoupling, which is what we were seeing right now. So this is for the market analysis. So what I would like to end the webinar with is with some sources for you to go and look into. This is, of course, mainly for beginners. It's not as sophisticated as Glassnode and other kind of sources that you can go through, but nevertheless, this is going to be very important for you guys to take into consideration. First of all, I mean, CoinMarketCap is, it's kind of like a must if you are new to cryptocurrencies. Why? Because CoinMarketCap summarizes a lot of the information, not only in price action in terms of market capitalization, which are the biggest projects, which are the leading cryptocurrencies out there. Of course, we have Bitcoin and Ethereum in the top two. They have been there for a long time. Their market capitalization is on the billions, 200 billion for Bitcoin, 40 billions for Ethereum, then Tether, XRP. These have been the main four most of the time. Then we have things like Bitcoin Cash. Binance is going up a lot again. It's getting more momentum. Chainlink is still here. Cardano, Polkadot, Litecoin, and EOS have been going down. But nevertheless, the important thing about this platform, about this source, is it's really a summary of the gains, summary of the losses, and not only that. There's a lot that you can see. That you can see the number of projects out there, the number of markets, and you can also see the market cap. Now, why is the market cap important? Because this tells you how much money is kind of invested in Bitcoin or in the total market cap. Here, I don't know why it's not really showing the total market capitalization. Here it is. So here, I hope that you find what I was telling you. If we put all time, let me wait for it to refresh. But the point here is that you can see where the market capitalization has gone. This is the point that I was talking about, almost 800, 700 billion in here at the peak. There is the 800 figure. And again, this is what I was talking about. For instance, here, we were talking in the news that 2012, right? And 2012, if we go all the way there, we were talking about a market capitalization less than 1 billion potentially. So again, this is why it's important to think about the macro picture, right? And I don't care about price. I care more about the market capitalization, because that's the overall sentiment of what the projects are worth or will be worth or be valued in the future. All right, in this case, a lot of people were speculating that the market cap, the right price was 800 billion, which again, it did go back down because there was not a lot of projects that could sustain that credibility in there, and this is what happened. And even right now, we are at around 350, 360 billion market cap, which is very, very healthy in my opinion. But again, this is something that we also need to take a look at, because this might also be a case of support and resistances. For instance, here we have a high in here, so potentially at around, I would say, 400 and 500, we're gonna find potential resistance in there if this goes up, which is nowhere near the 14,000 price action, which happened around here. But again, I'm digressing. The important thing here is not only for you to see the market capitalization, but also the dominance The dominance is going to be very important. Of course, here you will see that Bitcoin, for most of the time, it was dominant throughout the cryptocurrency history. Then this is in 2017 when Bitcoin started to lose momentum to other altcoins. As I pointed out, the altcoin bubble in there, or the ICO bubble mainly. Then Bitcoin started going up once again, and now it's losing dominance. This is basically due to DeFi. Now, this again, take it into consideration, because as projects become more mature, I don't doubt that they're gonna take some of the gains of Bitcoin, but Bitcoin is the standard pretty much, at least as a reserve of value. So I wouldn't doubt that Bitcoin still goes up, even if everything starts going up. Now that's for cryptocurrency, coin market cap. Now these, blockchain whispers, it's very interesting, mainly if you are trading. Why? Because here it's kind of like a summary of the longs and shorts positions in the different exchanges. Here, for instance, in Bitfinex, you can see that in the summary, it's 89% of the people are longing. Bitmex, almost 70% are longing. Binance, 64% are longing. And the total is 75% of the people who are taking positions are long. So the market is looking very exuberant at this point in time. Very interestingly, Binance, I saw this a couple days ago, before this last leg to the upside, and it was 50% shorts. So basically people were a little bit bearish in that sense. Now this is important again. Why? Because it will show you where people are expecting the market to go. Now, as a contrarian perspective, what I try to do is say, okay, if literally everyone is trying to go long, then that might mean that shorts are not entering the market or are waiting. Here, the current market sentiment is indecisive, which it is. It's, as I said, a make or break moment. But again, this is for you to see how the market sentiment is behaving with the different people who are longing and shorting. So very useful tool if you want a heads up what other people are currently doing. I would use this more as a contrarian tool. For instance, if everyone is again, that's my trading style. You don't have to do that. But if I see that a lot of people are starting longing, I might be a little bit more bearish depending on other indicators and so. I have talked about crypto and greed index, but again, for you guys who are new, who are interested in crypto, this is a must tool by alternative.me. Basically, it tells you overall, depending on the different factors, volatility, market momentum, social media, Bitcoin dominance, it tells whether the price is very greedy or whether it's fearful. Now, I have been talking a lot about the price action. Usually when it gets to a level 80s, high 80s or 70s, the cryptocurrency market is kind of like in a potential top. And then that's where it actually starts coming down. And you can see this almost reflects exactly like the price action. So this is a very good measure of kind of overbought and oversold, where people are mainly exuberant or very fearful. Now here we're still in this consolidation. I would be assuming that if we actually break that resistance, and again, this is why I'm pointing out so much on that resistance area, because if it breaks to the upside, we're probably going to reach these levels at around 14,000. That's my expectation. Again, we have to wait and see if it happens. But if not, if it fails, I would not doubt that this continues going down. Again, this is very uncertain because it's neutral territory. I think people are okay with the price action right now, and they're just really waiting to see if other people are actually going to break those levels or not. But we're going to still need to wait and see. Now, just almost to finish this webinar, the next one is Crypto Watch. Very interesting, definitely. I use it mainly for the correlation between different pairs. So here you can basically just add or take the different projects that you want. So for instance, if you are taking a look at Bitcoin, Ethereum, Stellar, maybe put in their Litecoin, EOS, Link, whatever you want. Here it will tell you the different correlation between the different pairs. or between the different assets. Now, why is this important? Because if you are trading cryptocurrencies, if you are trading or having the same positions on different assets and you think, okay, I'm diversified, maybe that's not entirely true. The reason is because mostly the cryptocurrency market is very correlated. So if Bitcoin goes up, everything goes up, at the same time. Now, of course, there's some more volatility in different assets. Sometimes if Bitcoin goes up, maybe Ethereum goes up almost twice as much. And sometimes it's the opposite. If Bitcoin goes down, sometimes some of the altcoins go down even more in terms of percentages because they're more volatile. Now here, it helps you compare in terms of a percentage how correlated they are. For instance, here you can see that Bitcoin and Ethereum is almost 90%, 0.87 in terms of correlation. Now you can change, what I like here is you can change the correlation between different time frames. If you're investing day trading or even swing trading, I would say, using the 7-day is a better approximation, because the 24-hour, I don't know about that, because coins move a lot. So in the short term, they might not show as being very correlated, but on the longer time frame, if you have a trade that goes 1, 2, 3, 4 days, this might be a better expectation. So in terms of this, again, you can see against Ethereum very correlated, against Stellar not as correlated, but still there's some correlation. If you were trading, I would say if you have more than one trade, it would be way better to have different trades on Bitcoin and Stellar than on Ethereum, because you're expecting that if Bitcoin goes up, Ethereum goes up, and in reality you're not trading two assets. In reality, you are just trading kind of like a bigger position or a more leveraged position. That's what I want to get at. Again, you can see how most cryptocurrencies are correlated with each other. They're more than 0.5 usually. Maybe if you're day trading, you can take a look at this to see what they've been doing. Maybe at the day trading perspective, if you're not holding for more than a day, maybe trading with this will be very, might be very positive in terms of what you do. In any case, this is Crypto Watch. This is not the only thing that you can see. There's more that you can see about the markets, correlation, and so on. What I mainly use it for in terms of correlations. Now, the last one, you might know that it's important to take a look at the different financial news. This is, of course, very important in Forex. You will watch the economic calendar. You might be kind of staying out of the different high impact news. Here is, it's pretty similar. You can see which potential news or potential events are going to be happening. And the good thing here is that you can actually filter. For instance, if you go to top 10 coins, you can go on and search on the top 10 coins if you're trading them. Here, for instance, you will see Chainlink appears in there, 20th of October, which is today. They have Bitstamp listing, so that might be good for Chainlink. Bitstamp is a very big exchange, and you have different news here. For instance, you will see XRP, Ethereum is still here. Ethereum 2.0, which a lot of people think it might happen in maybe not December 31, but before. A lot of people are not thinking that it's going to happen, that it's going to happen next year. But at the very least, you can see where the news are going to be, right? Or what's going to happen with different kind of like projects. We also have XRP in here, events with Binance, Polkadot has been there, token minting in here. Here in 2024 is the next Bitcoin halving, which is is super important. Of course, we have seen it in the past, but again, this is for you to really take a look at the different financial news, at least for cryptocurrencies, at the different projects. This is something that I take a look every now and then, because what I've seen is when there's important news for a particular altcoins is that they rally a lot, and I've made a mistake of kind of shorting when news of this kind are happening, which is not the best way to do. So be careful, and also be aware of the different projects and what they're doing. But in any case, that's pretty much what I wanted to bring to you guys. Now let's see if there's more questions. In your view, what main factors will drive the Bitcoin price up, provided that quantitative easing is discontinued in the US sooner rather than later? I mean, soon, when we talk about soon, how soon that is, because they have already established that they're okay until 2023 at the very least to do or keep this kind of aggressive QE, right? I mean, they have already said and commented on this, the Fed. So in terms of this, again, what I'm expecting for Bitcoin is really the decoupling, because right now this is what I've been pointing out, is that it has been correlated with the standard market, with traditional financial markets here in the S&P. Let me just switch this up. Here you can see once again. So let me go back again at your question. So of course, if QE continues, now the thing is that it's difficult for me to say, of course, what happened, because that's only speculation. But what really is difficult is that we have a very, very mixed environment. I don't think we have seen anything like this before, where with a pandemic we have a lot of negatives, but with quantitative easing we should have a lot of positives in terms of the markets. We have seen this in the stock market, right? How it rallied because of the QE. I mean, they started printing money, and the more they printed, the more the stock market went up. And we have seen this. The same has been for Bitcoin, right? The more they have printing, the more this has gone up. The more they have printing, the lower the dollar currency index has gone. So this is still true. Now, for me, the real main factor, at least for Bitcoin to decouple, would be that people realize that the real economy is not doing that great. So if they realize that, what I would be expecting in terms of looking at Bitcoin going up is that the stock market starts going or continue going down, kind of like correcting from this over-exuberant moment, because we are not better than we were before. You take a look at airlines, if you take the aerospace industry. I graduated as an aerospace industry, and I know a lot of people. I have a lot of networking there, and they're doing bad. Even I think potentially, companies like Rolls-Royce are selling parts of their business and so on. So it's very interesting to see what is happening. So again, this price action is not showing in the market overall, right? I mean, in the economy, the market is over exuberant. So definitely what I would like to see is this, again, being consolidating here, potentially going down, kind of correcting from this exuberance that has been happening, and Bitcoin breaking these levels. Because if Bitcoin breaks these levels, that's when potentially even institutions are going to see this more as a backup, and are going to start switching. If they're switched from risk on assets, they're not only going to be putting in gold, which we have seen, they're also going to be putting in Bitcoin. And what I think it might happen if this starts kind of like phasing out, and again, traditional markets are going down and Bitcoin is going up, is that other institutions are gonna start to increase the percentage of exposure in Bitcoin, because right now it's almost been kind of like 1%. Kind of that's the industry standard for big institutions. But if this happens, I don't see why they can't increase it a little bit more. Mainly hedging, again, as you say, hedging the QE. Now, the second part is that if it discontinued rather sooner than later, so let's say that by 2023 they decide to increase the interest rates, I would see that that's when Bitcoin is gonna lose some gains, definitely. If they start increasing interest rates. I mean, that's just standard in terms of what the market does, because whenever they increase interest rates, of course the currency index tend to go up, because traditionally, of course, that's basically saying that it's more valuable to hold this. If you have saving accounts, they are gonna start yielding a little bit more. But to be honest, I don't see them doing this for a long time. I mean, they say 2023, but who knows if it's really gonna be until 2023 that they are gonna stop the QE. I don't think that they will just aggressively come back and say, hey, okay, we have not been, we have been doing QE for so long, and then all of a sudden they're gonna revert back, unless the economy really, really starts shifting. Which again, there's a lot of uncertainty what the economy might do, and how, if you take a look, I've watched recent videos on how much credit card debt is, how many trillions of credit card debt is in the market, how much debt overall there is, right? So again, these few years are going to really highlight what's going to be happening with the environment. I think people are realizing that Bitcoin could be that reserve of value, just like gold. It's easier to access, it's cheaper, because if you want to buy gold, right, if you want to buy it physically, you're going to overpay for that. That's how they make so much money. Usually the prices of gold are going to be well above 30%. If you're lucky, sometimes even twice as much in terms of how much gold you can actually get versus the spot price. So Bitcoin, I think, is a better alternative. Bitcoin is I think it's going to have a lot of the benefits from this QE going forward, definitely. But again, I wouldn't speculate just that it's just going up. And this is why I'm waiting for this moment, really, to see if Bitcoin really breaks out. Then I would argue that these factors are going to be into play, and that Bitcoin might still go up next 14,000. And if it really rallies and the economy still goes down, and people see Bitcoin as a reserve of value, that's the key here. If they do see it similar to gold, if stocks go down, Bitcoin and gold are still gonna go up. But again, they need to decouple. As of right now, I don't see any confirmation. I'm just waiting for some confirmation in here. If gold breaks this area, continues going back up, then and if Bitcoin falls, because what we want to see is Bitcoin following gold rather than traditional stocks. It has been a little bit correlated with this, but of course, in price action, at least in my opinion, still gold, has been way better than Bitcoin. Of course, because of volatility, you might not earn as much in gold because the movements are not as big. But even after the pandemic, if you see here, the way that the gold has continually increasing, with its corrections and so on, it has been unprecedented. Now here we actually, what I'm taking a look at is that despite having a peak in here and having a peak in here, guess which one has recovered? Bitcoin. So the potential is there. That's how I want to end this. But thank you for your question. Maybe I talked a little bit too much in response, but I hope that you see how I'm looking this at the markets in terms of the macro picture at the very least. But in any case, traders, I hope that you enjoyed the webinar. If you have any questions, please tag me in the Slack group. I would gladly answer them. And I will see you next week. Take care.